Hey folks, Dan Frio here with your closing bell for August 21st, 2024. So there was something really odd that happened today. They revised the employment numbers, or the number of people working, and the revision was a reduction of 800,000 people. So I want to explain this to you because the bond market, basically the equity markets aren't even reacting to this, and I'm not sure why. So that's what we're going to talk about in today's video. You see mortgage rates come down a little bit, but I thought they'd come down much more than this. Why? Well, right through here. Here's what's happening in the mainstream media right through here. The thing is kind of, I would think it'd be bigger headlines than it is. Right here, non-farm payroll grows, revision by 818,000. So basically it was meaning that the jobs report has been overinflated by almost 1 million people. So why is this a concern? Well, it's what the Federal Reserve is going to do. So right here, Fed Minutes shows that most of the members are likely to cut rates, but after today's event, they're probably all going to be there. Why? Well, let's get over to here. Here's the basically anomaly. The last jobs report that came in was the Friday before that huge crash. Remember the carry trade that caused the whole markets to crash and everything else? But there was the employment number came out that previous Friday, and that's when everybody's like, man, the Federal Reserve's got to do an emergency rate cut because we had fewer jobs than expected. And here's the headlines, and this was back on August 2nd. Okay, it's right through here. Okay, so what I want to show you is if you really dive in to the numbers here, and we're going to go to Steve Leisman here in a second, what's going on with all these numbers, is if you dive into the numbers that we're showing here, let me see if I can slide this across. I don't know why it's not moving, but let's just look through here. I'll get my head out of the way so you guys can see it. On August 2nd, or right around in there, here's what happened. You had right through here, August 1st, you can see where it says it closed. The market closed at 100.38. It's right kind of next to my little arrow up there. Okay, so that was the day. So 100.38 was the day before that one jobs report came in. So then we go over to here, and what did it close at? 100.91. Okay, a difference of about 60 basis points. 60. So that was a revision, or that was a jobs report number that came in kind of just a little bit lower than expected. So when you revise the numbers by almost 1 million, what should happen? Well, what should happen should be much more than we're seeing right now on the screen. So let's get over to this so I can show you guys what's going on here. Now it's saying the MBS market is up 6 ticks. I was expecting 30, 40, 50 maybe. So that's basically what we're going to talk about right now. But Steve Leisman from CNBC, he has the breakdown of this stuff, and I don't know what's going on, folks. And I just hate to admit it right now. I don't know what's going on because $1 million revision, or 1 million person revision in the jobs report should be kind of mainstream media blowing this thing up because it's like, well, the jobs report is much worse than expected. So Steve Leisman, kind of, can you break this down for us and help us make sense of it? So take it away, buddy.
Let's bring in Steve Leisman on the phone from Jackson Hole with some reaction to those job revisions. Steve, market initially took it as fairly dovish. Historically, though, it is a pretty good big revision, right?
Yeah, you got to go back to 2009 to find a bigger downward revision here. It looked like in 2009 they went down by what's the number here? Minus 824. So that's slightly smaller than that. That, of course, was a time when the economy was in free fall. It's not when you parse.
Remember when he said this was 2009. That was the big crash back when. So is this more signs of a crash to continue? Well, if you're interested in that, check out our live video that we just did with Altos Research, and you're going to find out, is that housing crash coming? And if so, how much is that crash going to be? So check out that video. I'll put right up through there. It was a live event that we just had. So without further ado, my apologies. Let's get back to it.
Sit out over the 12-month period. Again, this is the 12 months ending in March 2024. So it's a little unclear what it means, how relevant it is for today's jobs numbers. But it comes up to 68,000. So essentially what we were doing, instead of doing 250 average, we were doing, say, 185 to 200,000 in that zone. It depends a little bit, Carl. They'll parse it out over the months in February. This is the total for the year ending March 2024. Jobless claims have been running relatively low. Remember, this is a process by which they true up the payroll report to the actual jobless claims numbers. So, or the jobless unemployment benefits that are being paid. There is a question, Carl, that's interesting from a Goldman Sachs report about how they're counting immigrants here and unauthorized immigrants and whether they should or should not be counted in the payroll. So Goldman Sachs takes a much more benign view of this revision, saying they're throwing people off of payrolls who actually were on the payrolls. I guess that's a debate for another day. Net, I think that when you see that the payrolls have been...
Is he insinuating people are hiring illegal people to work for them? Interesting.
Revised down, they were slightly less hot than they were. It's somewhat dovish, but I'm not sure how much signal to take from this. It's a big number. I think it'll be played politically by both sides a little bit, or certainly by the Republican side, suggesting there was more weakness in the jobs market. But still, you ran 200,000 or so over that time period. And you ask yourself the question, was the Fed too hot or was the Fed too tight during that time? Probably not. If these numbers had come out at 200,000, I think the Fed would likely have pursued the same process. Does this mean they should be lower now? I'm not sure they should be much lower. But net, if you ask me, what does 818 downward on the payrolls mean? Argues a bit more for a 25 than a 50, but the contemporary data will be much more influential.
It's hard to believe they just carte blanche just say, well, sorry, the employment numbers or the data was about a million people off. It's just some accounting errors and things. It's really not going to play any role in any of this. It does. It does, because that's one of the mandates that the Federal Reserve has. It's keeping the economy at full employment and keeping prices stable. They brought prices down. Now they got to really worry about the jobs market. So that's further proof that the economy is starting to shrink, and that the Federal Reserve really needs to come in and start cutting rates before they push us into a recession and further decline from there. So that's what we got for the closing bell. If we go to the equity markets, let's go to them and see how they're faring right now. Let's scroll up. We have the Dow Jones up just meaninglessly about 50 points. S&P up 23. NASDAQ hit the triple digits of up 108. Russell 2000. This is where a lot of people are moving their money in right now, and you can see that with the percentage gains right now. A lot of people are getting out of the big IT things and things like that and moving over to smaller companies, and that's what the Russell 2K has. The VIX upticked a little bit to 16. It's still right in line. This is telling us how kind of skittish the markets are. Let's go to oil, see if the oil is coming down. Oil is coming down. So wow, this is fantastic news right through here. When the oil goes down, that means inflation, basically the top line of inflation is going to start coming down as well. So let's just take a quick glimpse of Bitcoin's over 61 again. We have analysts coming in saying they're expecting Bitcoin to be at 100 to 150 by the end of this year. So I'm only sitting there waiting. I'm hoping so, because I got money in Bitcoin, but I'm not telling you guys to do that or any investments to make. My goal here is just so you understand the markets, and the emphasis we have here is on real estate. So let's get over to what the markets are doing right now. Here's where mortgage rates are. Again, I'm estimating that these are going to start coming down a little bit further. If we go into the economic calendar that we have the rest of this week, let's scroll down through here and see what that looks like. Tomorrow and the rest of the week, we'll blow this up just a little bit so you guys can see this, and I'll blow it up on my end as well. So we have jobless claims coming in on Thursday. That is tomorrow. That's going to be a huge market mover right there. Continued claims. This is what basically caused the market to hiccup the last time. So that's what we have coming in here. Existing home sales as well, and that's what looks like we have. Just basically tomorrow is all the rest of the data that we have for the week. So make sure you tune in tomorrow morning so we can go through this and see what market reactions there are at that point. So my name is Dan Frio. I do this report on a daily basis to help you guys understand the real estate market. If you're out there looking to maybe buy your first house, buy your first investment property, does it make sense to refinance? This is what we're here for. So I'm a licensed mortgage loan officer, licensed in all 50 states, and I do these videos just to help you guys understand the markets. So if you're out there looking to try to buy your first house, please do me one thing. Do me one thing. Click the grant finder. See if there's a grant out there to help you out. We got two of them up there right now. One's a national grant. One is one in the Chicagoland area. But if you're trying to do anything else, buy the house, refinance your house, buy an investment property, another house, or whatever else, please reach out to us. Go to apply now, click there. You're going to schedule a consultation with us so we can get the story and you can ask your questions. But if you'd rather call in, you can do that as well. Just scroll down to the bottom of our website and that information is right there. So it's 844-775 5626, or you can email me directly. Yep, I am back, and I'll caught up on my emails. So if I haven't replied yet, I might have missed yours. Please reply or email me back, and I promise you I'll get back with you by the end of the day or first thing in the morning. So thanks so much for watching, guys. God bless. And if you haven't yet, we hit 30,000 subscribers a couple weeks ago. Help us make that grow to 100,000 as quick as we can. You can do that by clicking the subscribe button right over there. Thanks so much for watching, guys. God bless. Have a fantastic evening. I'll see you here tomorrow. Bye-bye.